Hello, my friends, and welcome back to another episode of Land Stories Live. I am your host, Dave Deniston of Generation Family Properties, LLC, where our goal is to help hundreds of people just like you own land. Most of all, we would love to tell your land story. Well, as many of you know, we specialize in doing owner financing on a lot of our properties. However, I'm certainly not a bank and don't have all the resources necessarily. And so we charge interest, sometimes significant interest, depending upon the length of what someone may finance it for. And that may perhaps be higher than what a bank would charge you. We know many of our clients don't often qualify for traditional bank financing, and we've been filling in that hole to help them out from time to time. Well, today I have a special guest with me. He is the president of Landline Lending, and he is an accredited land consultant with the REALTORS Land Institute. So he's seen a lot of stuff, been in this business probably longer than I have. From what I see on my notes here, looks like he has been in the business for over 20 years in real estate, working in some farm credits and in land, as well as other industries, I'm sure, too. His company is called Landline Lending, Triple L. It was established by land brokers who saw a need in land lending and sought to create a solution. And I know they're working hard to simplify loans wherever possible. They're looking for quick closing, competitive lending solutions, and quality customer service. Well, I'm glad to have him on because I'm interested in talking land, talking about lending, and learning more about how this can benefit our customers. Please help me welcome Jeramy Stephens from Landline Lending. Welcome, Jeramy.
Thank you, Dave. Thanks for having me on today.
Yeah, man. So where are you calling from? Where are you at?
We are based out of Little Rock, Arkansas, but we do land loans from coast to coast and border to border. So there's a few states that we're not registered to do, but most any state in this country we can make a land loan for you.
I love it. I went down, drove through Arkansas. My folks moved from New Jersey to Dallas. So we drove through Arkansas on the way to Dallas and had some good barbecue out there.
Delicious barbecue. It's not Texas barbecue and it's not East Coast Carolina barbecue, but it's kind of that Memphis barbecue when you come through here. So there's some great places. They're usually not on the main path. They're usually off the beaten road where you find the best places.
Well, tell me about your history a little bit. Did you grow up in Arkansas or where
I
are you from?
did. I did grow up in Arkansas. I grew up in a town called Stuttgart, Arkansas, which is about 50 miles southeast of Little Rock. Little Rock's the capital of the dead center of the state. Where I grew up is rice country, rice farming. Commonly known, the town I grew up in is self-proclaimed duck and rice capital of the world. So lots of rice, lots of duck hunting. So been in Arkansas most of my life. I've been involved in land from college. Actually, in college, I got a degree in agricultural business with farm management and degree, and worked with the farm management and real estate company while interning in college, and kind of got the land bug. Starting with that, working in real estate and some farm management. Graduated college and went to work in the farm credit system and worked my way up. I was a branch manager in Eastern Arkansas in the farm credit system, and enjoyed that. Did that 5 or 6 years, and then kind of got into the real estate business. And I've been a real estate broker ever since. I was able to. I had to be an agent a couple of years before they let you loose with a broker's license. But I was in the brokerage business and still a licensed broker. I still hold a real estate license in 5 states. So and still do some brokerage side. But our company, we developed it because we found there's a need for land financing. You're out there, broker agent, dealing with people looking for land. One of the first questions often they ask is, where can we get this financed? Do you know anybody that'll finance this? Actually, a lot of questions, will owner finance it? And in your case, you do. And a lot of owners, they're not interested. They want to get their money and go do something else. So as we went down that path, we knew the farm credit system does a fantastic job for loaning money to fit certain needs. And then, traditional banks will fit certain needs. But we found kind of a niche in there that we thought we wanted to explore. So we got into that, and we have several funding sources that allow us to make short-term, long-term real estate loans on very different products. And so we did that, and been doing that for several years, and been becoming quite successful with it.
Interesting. So I want to go back to growing up in Arkansas a little bit, and talking about farming in Arkansas. Because, I think of farming, I think of Kansas, Nebraska, Iowa. Here in Minnesota, there's a lot of farming. There's just
Mhm.
fields all over the place as you get out of the metro area. What's it like there when you say farming? Like, is that like cattle farming, or like what kind of farming is down there in Arkansas?
Arkansas it has a really a lot of variation in farming. There's large cattle farms. There's large row crop farms. When you get on the eastern side of Arkansas, basically east of Little Rock, what we call the deltas, the Mississippi Delta, there are thousands upon thousands of acres of row crop. We grow rice, we grow cotton, we grow soybeans, wheat, winter wheat, corn. I mean, and just about all of your regular crops that we grow here. Again, there's large cattle farms in certain parts of the state. Arkansas is also a very large timber state, so we have a lot of timber production in different areas. It's one of the top 5 chicken producers in the country, so we have a lot of chicken farms. So there's a lot of different things. Agriculture is the number one export out of the state of Arkansas. From row crops to chickens to turkeys to timber to cattle and everything in between.
Interesting. Well, you mentioned you grew up in an area where ducks were prevalent. Like, were you much of a hunter growing
I
up?
was still am, still go. Not quite as mad at them as I used to be when I was a kid. So don't quite get out of bed as early as I used to go. But yeah, it's still enjoyable. It's kind of a deal. Get out there with family and friends, and it's more of a social event, and just enjoy time together. So
Nice. I love it. That's good. That's good. Um, in doing what you guys are doing, tell me a bit about like what kind of properties y'all lend on, who's a good fit, stuff like that.
okay. We will lend on just about any type of property as long as it's not primarily residential or commercial use. We kind of have a cutoff of about 15 acres. We don't look at anything smaller than 15 because then you start getting more of residential properties, lots, and things like that. But as long as it's not in a city limits or a subdivided property or subdivided area, we're usually able to lend on it, whether it's agriculture, whether it's timberland, whether it's recreational use. We can usually do things like that. But if it's residential, primary residential use on a smaller acreage, we're not really qualified to do those. That gets in a different type of lending. And same thing with commercial. If it's a commercial building or a commercial development property, we're not really in line to do those as well. So
So,
we look at property.
so let me interrupt. I'm just curious, why not do those things? What?
Those type of loans are basically under regulations under RESPA and TRID loans, basically government, and so just a different set of lenders. We don't focus on that. We don't specialize in that. So we know land, so that's what we tend to lean to is lending on land. Um, and like I said, working through those things. As long as it's some type of open land, and it can be a residence, say if it's a house that sits on 20 30 acres, usually a little bit more than that. We have a kind of a cutoff. If it's 50%, the residence is worth 50% or less of the overall property, we're okay. If it's over 50% of the overall value, then we tend to shy away from those. But if it's a farm and it's got a house on it, it's your primary residence, that's not a problem. Same thing with other improvements, barns, sheds, anything like that. Uh, but we do see a lot of buyers that are looking for recreational properties, something that has some timberland value, or it may be a recreational property that does have some row crop ag land on it where they get some income, or pasture, run a few horses on it, your cows. So those are things that we really look for.
Interesting. I'm looking at a property right now. It's out in Navajo County, Arizona, and it's 40 acres. So, it meets your 15-acre minimum, but it's part of a subdivision. So does that knock it out kind of automatically?
That would knock
Um,
it out because
it,
what we look at is highest and best use.
Mhm.
And as long as if the highest and best use is residential or commercial, then that kind of knocks us out.
Got it. Got it. So even though it's large acreage, like, um, I'm sure people could hunt on it if they wanted to, but just
Hmm.
because it has been subdivided, that kind of knocks it out in that case. Interesting.
And it goes back to the value of it. You've got a property that say it's been subdivided, it's a 40-acre block, as you mentioned. Pricing, what's the highest and best use of that property? Well, if let's say it's priced at $10,000 an acre, well, the highest and best use of that is probably some type of residential development. Now, if it was priced at $2,000 an acre, highest and best use may be another purpose. So it kind of, that's how we hinge upon it. Everything is look at as its highest and best use.
Cool. All right. So 15 acres,
Hmm.
right? A
Hmm.
minimum. Could be hunting land, farmland, could have a structure on it.
Hmm.
But that's not a big deal. It just has to have a decent amount of acreage with which to
Correct.
make sense. Timberland you mentioned. Am I
Hmm.
missing anything? Just thinking back on what you
No,
said.
anything other ag related businesses, not necessarily businesses, but chicken farms, stockyards, things like that. We could look at those as well.
Cool. And so let's say someone, when should they be contacting you in the process, to get like approval per
Mhm.
se for a loan ahead of time to get an idea of what their interest rate may be?
We have several options. Looking at being growing up being a land broker. You're dealing with buyers and sellers, so a lot of times you definitely want your buyers to be qualified before they go out there and start making offers on things for their sake and your sake and the seller, to make sure everybody is on point of what's going on. We do offer a pre-approval program. Uh, it's submit a financial statement, and we run a credit bureau just to make sure the minimum credit score qualifies. And as long as you meet the ratios that we have set, our requirements, then we'll look at it and then issue a pre-approval up to that amount and what our rate is at that time. All rates are subject to change. We don't rate lock until the loans are approved, but give them a rate that here's where we are right now, and this is what if everything stays constant, this is where we would be. So we encourage people that are looking for land to contact us and go ahead and go through the pre-approval process to make sure that they're going to be qualified. They may not qualify for us, they may still qualify for somebody else, but at least give them a good idea of where they stand financially. If they may think, well, I can go buy a $500,000 property. Well, look at it, probably, maybe not. Or somebody thinks, well, I can only buy a $200,000 property. Well, you can do a little more than that if you'd like,
Yeah, yeah.
from your financial information that you've provided. But a pre-approval process, not a lot of verifications on the front end. I mean, like I said, we do run a credit bureau just to verify credit score. Then, once we get the pre-approval out to them, if they come back, and then we have a full application where we go through full underwriting and, appraisal, title, and everything for close.
So help me understand, in terms of this underwriting process, like is there a minimum kind of credit score that someone
We kind
should
of
have?
we look at about a 680 is about our bottom line credit score. So we're looking at the top end, the better borrowers to qualify for our loan programs. But if it's below a 680, there's going to have to be very, very strong in some other categories of the deal for us to be able to consider it. If it's over 680, though, we should be able to, as long as everything else checks out and meets the requirements, shouldn't be a problem.
Got it. So someone that has a credit score under 680, owner financing might be a better fit for them. Over 680, something like this might be better for them, in this particular
Exactly.
case.
It kind of goes back to anything. The higher your credit score, usually the lower your interest rate.
Yeah.
Same concept here. So if you have better credit, then you're able to get better terms and better rates.
Well, I'll tell a story here in just a minute. But I think what's interesting, I look at lending, and certainly, most banks, they will go and they typically go after federal programs. They're looking for FHA loans, ones that can
Hmm.
go through Fannie and Freddie and those kinds of entities, because their risk is like so small.
They're guaranteed loans, so they're willing to make those loans because they're guaranteed by the government.
For sure. I mean, just so low risk for the bank. With doing something like this, I'm guessing that there's not, like federal guarantees in a lot of cases, or do you as a lender, because I think of most banks wouldn't lend on land in a lot of cases.
In a lot of cases, depending on the area, I mean, a lot of smaller local banks in ag and rural areas will do it because nobody else is there to do it. So they will service those areas. For us, we don't do a lot of federally guaranteed loans. We do have some programs. We kind of look at it. The FHA or FSA, Farm Service Agency, has always had a young beginning farmer type program where they have less requirements. And if we can make a loan like that work, where they will loan them a certain amount of money, then we'll loan the balance of it. We have, first position on the mortgage, so that reduces our risk. That is an option. We don't do a lot of them, but that is an option that we have. But probably 95% plus of our loans are not guaranteed. So. But we have requirements down. I mean, I don't use you owner finance. I'm sure you have different rates that you require down. Anything under $300,000 loan, we require 25% down. You get over a $300,000 loan, then we're looking at 30 to 35% down. And we have some programs, if they're willing, able to put 45% down, then we have a lot quicker process and a lot better rate. I mean, because it's less risky loan.
And what is the range of rates right now? Because interest rates are so crazy low. You got a 10-year treasury paying like 1%. So, like what kind of rate range do you have?
We range anywhere from the adjustable rates. In fact, I just got some this morning. Adjustable rates, we're going to be in the upper 2s, low 3s on adjustable rates. 30-year fix, we're going to be just a little bit under 5 right now.
Wow. I mean, those are great rates.
Yeah. On land rates, those are awesome. I mean, you well know a lot of people go to buy land. All they've ever done is residential, and they're seeing 2%, 3%. The land market works a little different. I mean, you just said it. Land rates are based on U.S. Treasuries, so they're a little bit different base rate than the other markets. So sometimes when you tell them, well, a 30-year fix is going to be, $495, it's kind of sticker shock. Well, I can go, refinance my house for 3%. We're like, well, little bit different, different dynamics here.
And well, your butt's more on the line, with these kinds of things as a business, versus the banks who just say federal government's going to back us up the whole time. It's a different risk. So
we try to educate people a lot when they talk about getting a land loan. So they kind of know what to expect. I mean, a lot of these people, usually when you're buying land, you've borrowed money to buy a house, so you kind of understand the process somewhat. But again, a lot of them go to buy a house, they're used to putting 3 to 5% down in the low rate. So we have to educate them a little bit and say, hey, here's what we can do on land. Here's how the process works. I mean, as far as the application process, it's very similar. We have an application. We verify information, financial statements, tax returns, and just like you would with anything else. So appraisal, we go out and have an appraiser, in the area to go appraise the property, and then title and everything else, just like a regular loan and mortgage.
So how does it work in terms of like recording with the county? Is it, because I assume, things would have to go through title and escrow and stuff like that, which nowadays with the coronavirus takes forever in a lot of cases with title companies just backed up, plus high demand. I'm sure you've seen a lot of demand for your lending services in this environment where so many people want to get out of town. Where I was going was maybe talk a little bit about the how things have changed over the last year in terms of the process. And is it longer? Is it shorter? Is it the same? How have things changed for lending on land in the last 12 months?
Process has slowed down considerably due to due to coronavirus, different states. We operate in multiple states. So some states are strictly title company. You can do the whole transaction through a title company. Some states are attorney, where you have to run it through the attorney. So, vary on how how their office works. Title companies just line them up, come in, sign, move them to the next one. Attorneys' offices, they do other business, especially in a lot of the rural areas that we do business in. You may have an attorney, he may be in court today for some other case, so we're not closing any deals today. So you have that. You have people, not working. From a search standpoint, uh, when you go in there and you get a loan, let's say we have the loan approved, and then the next step is to order the appraisal and order the title. Well, a lot of the counties, again, we're working in rural areas. Well, records aren't available online. You physically have to still go to the county courthouse to check the records, to, check the title on the property. Well, with everything being shut down in some areas, that process really got delayed over the course of last year. Now, we are picking up. Things have seemed to be loosening up in a lot of areas. Courthouses are being a lot more open, letting searchers come in and do their job. So that has seemed to speed up the process. We like to turn loans around in 30 to 45 days, depending on, appraisal and title. They were being extended past that last year during the middle of coronavirus, in the middle of the year, as we were just getting into it and really, okay, we're shutting everything down. Towards the end of the year, the process was sped back up. But anybody that walks in, I tell them, say, we're looking 30 to 45 days. If everything that can possibly go right goes right, we have no hiccups whatsoever, we can get you done in 30 days. Normally, it's going to be probably about 45. So, because you have appraisers, you mentioned something, the land business has been crazy. It's been busy. It's hot. People trying to get out of the city wanting to buy something. So you've got list of appraisers. If there's surveys are necessary, you've got all these lists of people that you got to have to do these things to make these deals qualify. And well, we can get to it, but it's going to be 5 weeks. We can get to it, it's going to be 3 weeks. So that has definitely slowed down the process. A lot of things we don't really have control over. I mean, we can get the loan approved depending on what type of application process we go through. We can go anywhere from 36 hours probably to about a business, 7 business days on a full, larger, more complex deal. We can get an answer, but the timing comes on the rest of the deal.
Do you, in terms of like being protecting yourselves as a business, are you the ones actually being the loan servicer and the lender, or do you guys partner with different companies who will actually fund the loan and take care of that whole side of it?
We partner with some other companies that basically they're taking care of the funding of the loan, and also the actual payments and everything that people make payments on it. They take care of all of that. We strictly are putting A and B together. We're finding buyers and we're offering them products to so having multiple sources. This source may fit this buyer better than buyer A better than buyer B, and vice versa with some of the other sources. So what we try to tell people is, like, let's take a look at what you have. That's why we like to do the pre-approval process. Is we'll see what you have financially, the property that you're most interested in. If you've already found one, or if you haven't found one, then we know which funding source we need to look to that'll be the best and most efficient program for what you're trying to do.
So you guys are like loan brokers in a sense. So you're shopping out among different
exactly
companies. Got it.
Yeah.
And so, would you say, like, does one thing we have to deal with as owner financers is that, of course, people can be late on payments, they can default, and certainly this last year has had a lot of financial challenges for people, and although ironically we actually had less defaults in 2020 than we did in 2019 with more volume. So that was surprising to me. I was expecting, everyone's going to default, we're going to have to resell every single one of our properties. And I was actually pleasantly surprised that didn't happen. What was it like from your end? Were you seeing default? How does that work with people that get behind on payments, and when do they repossess it? All that kind of stuff.
In our system, it goes to the lending source. They fund it. Now, if people are late on payments to people that we have supplied, then they ask us to help manage that late payment. So we deal with those directly. We don't handle the payments, but we do help manage the delinquencies in them. Just like you said, 2020, it's been, the rate of delinquency has been very, very low. We haven't had that issue. What we've come to find out in the land business is people don't want to lose their piece of land. They'll quit paying on something else before they quit paying for their piece of land. So we don't really see a lot of that. Going back to even when I was in farm credit system, we just didn't see a lot of default unless it was some type of, economic disaster for them personally, or, something like that. We just, like I said, people own the land, they don't want to give it up. I mean, they'll do whatever they can. So to answer that question, it's been fairly stable. We haven't really seen any uptick whatsoever in delinquencies.
Interesting. Yeah. I mean, it's interesting to hear that from someone else too, just that hasn't been that big of a deal, which I know a lot of people going through some stuff, and we're certainly happy to work things out with people. Does that ever come up, where, gosh, I'd lost my job, I'm on unemployment, can we change the payment for a little bit? Does something like that happen on your end?
It happens occasionally, but again, not very often. It seems that most of our people, again, they want to protect that asset. They want to protect that land, whether it's a family farm, that they've been working for years, or a place they had in their family, hunting, whatever, however they use it, they want to protect it. I mean, whether it's just because that's my place where I go, and especially in times like now, I want to make sure I've got my place where I can go hide if necessary, or get out and get out of the city. So we really haven't seen that. It's kind of remarkable. The land business is really, I want to say, insulated a lot from a lot of the other things that goes around in our economy for whatever reason. But there's always a personal connection, it seems to be, with people in land, and they really want to maintain that ownership and protect it at all costs.
Well, I wasn't doing land stuff. I have another business that I've been doing since 2002. So in the financial crisis, um, from what I understand, there were tons of defaults with
Mhm.
land, and things really, really cratered. Is
Mhm.
is that your memory? That happened on that
Those
end?
deals were more, from my memory, were more from a development side, whether it was housing development, commercial development. You had a lot of people buying land in areas, in the fringe areas. Maybe it was getting into the ag sector because that was only where the land was available. And they were buying it at probably a higher than market price because everything was going crazy in 5, 6, 7. I mean, it was just, money was flowing. Everything was absolutely insane. And I think a lot of that, when the market turned, they were held in with these lands that were producing absolutely no income, and they had to dump it because a residential commercial. I mean, you buy a 40-acre tract for residential development, you want to go in and cut it and make 20 some odd lots out of it, sell the lots to the builders, and the builders build the homes, and you go on to the next tract. Well, if the builders aren't building the homes, then nobody's there to buy the lots, and you're hung with 40 acres that's doing absolutely nothing, and you got to pay a note on it, and you paid a high price for it because you knew what you were going to do. You were going to develop it and jack the price up of the lots, and put your infrastructure in. And a lot of them never saw infrastructure. They were just properties that they were waiting on hold to do that from a residential and commercial side. Now, strong from the straight land side, like the ag sector and timberland recreation, you didn't see that.
Hmm. I would make the argument that perhaps we're getting in some of that again today, because interest rates are so freaking low, that's jacking up prices
Mm-hmm.
across the residential real estate in particular. I still hear multiple offers and, very competitive price environment, which I imagine that same development kind of mentality from my stance. Hey, it may take a while for that bubble to burst, but I see that bubble. What's your take?
You definitely see it on the residential side where that's going. I mean, the residential demand right now is just crazy insane across the country. You talk with different people, that market is so hot. It can't be any hotter, I don't think. What scares me a little bit from that side of it is you do see some lenders out there, uh, 0% down, 1% down, 2% down. You start seeing that number floated out there and it starts to worry you a little bit. It's like, okay, we have a 0% down, there's a market ticks down for whatever reason. We're going into a level of uncertainty that we don't know. None of us know where we're going in the next 2 months, 2 years, 4 years. I mean, we're things are going to change. They may be for the good, they may be for the bad. We don't really know. Regardless of what political affiliation you are, it could be great, it could not be. It just depends on how you look at it. But getting back to the original question is, when I start seeing lenders at that level of going 1 to 2%, I get a little nervous. Where we're at 25%, market ticks down 10, 15%, we're still protected. I mean, it's not a major issue. The other thing though that doesn't make me as quite as nervous from the land sector is overall debt is probably less now than it was in '08 on properties. So, instead of owing 90%, I think they probably owe 60, 75%. Therefore, you've got a little bit of equity there to hopefully take on the storm.
Well, I know a lot of people would argue with population growth and a lot of the millennials buying houses, moving out of apartments into houses. That's going to help to keep the demand up for new build and stuff like that. I guess as long as interest rates are low, this thing is going to keep going, which to me, at least in 2021, that would appear to be the case. That would appear to be the case. We'll see.
I think through 2021, I think we'll be, I think you're exactly right. I think interest rates will stay close to where they are. At some point, we can't keep loaning money so cheap. I mean, inflation will kick in. So you've got to, there's going to have to be an uptick at some point. I mean, no matter what market you're looking at, from residential loans or commercial loans or to land loans, it's still, you got a certain amount of money that's funding those. And if the investment's not there, then, you got to make it attractive for the investment coming into it.
Absolutely. Well, what's interesting is at least we deal with a lot of residential rural land. And what I've noticed as I look back at price history is the price really hasn't changed that much. It's gone up lately the last year. But if you look back 20 years ago, in many cases, when a lot of these things were originally subdivided, we're still buying it for a heck of a lot less than what someone bought it for 20 years ago, and we're selling it for less than what someone bought it for 20 years ago. So that is tells me there's a lot of room for things to still go, even to go back to where they were when the lots were originally subdivided. So that's kind of my take on it. I'm not saying that there's going to be 100% appreciation or anything, but I think there's room for land to continue to grow. But we'll see. Time will tell.
Land prices have continued to climb. We're still in we're not in a strong economy due to the pandemic, but before all this hit, I mean, the economy was absolutely roaring, and land prices were following. I could see some correction in certain sectors of the land market. One of the sectors I look at is probably your recreational type properties. If available money's not there, economy slows down. You got most people buying recreational property. They work a job, they have a salary job, and they just want a place to go, whether it's to hunt, to hike, to whatever. I mean, they just want a place to go out of the country and get away out in rural America. And I could see if the economy slows down and that income levels, start shortening up a little bit, I could see that market not quite being as hot, and maybe affect some pricing. But right now, with everybody wanting a piece, it's been pinned up in their house or somewhere in the city. They all want 20 acres, 40 acres somewhere. So right now that market's extremely hot, and it may continue depending on how long it takes us to work through this.
Well, Jeremy, it's been a fun conversation. We've covered a lot in this short time period. Do you have any other thoughts or things you want to share with us as we wrap up this podcast?
Yeah, the only thing just to add is, if you're looking for a land lender, give us a look. We got a website out there you take a look at. You can send us some information, get a pre-approval packet. Like I said, if you're looking to buy some land and kind of want to get an idea where you're at before you start stepping off the deep end and making a purchase, we'd be happy to talk to you and give you some options if see if we're able to help you.
Awesome. And where can they find you guys?
They can find us on our website at landlinelending.com, just like it's spelled out, just like it sounds, LANDLINE, lending, LENDING.com.
All right, my friends. Well, that'll wrap up the episode for today. Tune in to our YouTube channel, to Facebook. We typically go live on Mondays in the later morning, like 11:30 a.m. Central. If you have a question about land, make sure to submit it to me, contact@genfamproperties.com. Or if you have questions about lending and you want to talk more to Landline, we're going to put links in here to their website and to Facebook, their Facebook account, and all kinds of stuff like that. Well, thank you so much for tuning into Land Stories today with me, your host, Dave Deniston. Make sure to check out all of our properties at www.genfamproperties.com. Thank you so much and have a good one. Bye-bye.